Hello and welcome to the Fundamental Value podcast, hosted by Joshua Frank, co-founder and CEO of The Tie. On Fundamental Value, we speak with leading analysts, traditional finance and digital asset firms, and investigate how leading minds in the cryptocurrency space research, analyze, and quantify the value of digital assets. Quick disclaimer, this podcast was recorded and is being made available solely for informational purposes.
Hello and welcome to Fundamental Value, a journey to quantify crypto. I'm your host, Joshua Frank, co-founder and CEO of The Tie. Today, I am more than excited to be joined by Mo Shaikh, who is the co-founder and CEO of Aptos. Mo, it's great to have you on.
Thanks for having me. I appreciate it. Big fan of the show. Love what you've been doing for such a long time and excited to be here.
Cool. So we always like to start with a little background and, figuring out how you kind of found your way down the proverbial crypto rabbit hole. So can you kind of walk us through your background, before crypto? And we were chatting a little bit before the show about, your earlier years within the space.
Yeah. We were chatting about how I deeply miss New York and have moved to the Bay Area, but part of it was for crypto. But I'm a first generation immigrant. My parents came to America in 1990, and my father had to work two jobs. He was making bedding sheets in the morning at a factory, and he was driving a taxi cab in the evenings. And the interesting thing there is a story that resonated with me pretty much throughout my entire life. But when he would kind of work for that taxi company, he didn't bring home all the money that he earned from fares. A lot of that money would go to the medallion owners, who were kind of faceless entities, a platform for taxis. And that story was interesting because as I ultimately stumbled upon working in Wall Street and working at places like BlackRock, I saw that same story being repeated. People that are building and creating a lot of the value end up losing a lot of that value to parties in between that may just act as brokers or rent seekers. Fast forward coming out of BlackRock, I went to business school, I had a couple startups, but I joined BCG as a consultant. And in 2016, I got pulled on a case where we started looking at crypto and blockchain technology. And what I loved about what blockchain technology was potentially doing, it was creating closer proximity from the person that was creating value to the person who would ultimately benefit from that value. And that was kind of a light bulb moment for me. And I thought, blockchain could have a really big impact and really be disruptive to a lot of platforms. And kind of fast forward, here we are. Ultimately, here I am kind of building some of the core pieces, the L1 and the infrastructure to help make that happen. And so it's been an exciting journey being in the space. Coming out of that consulting case, the only folks that were really out there in 2017 was Ethereum and a company called ConsenSys. They were trying to take blockchain and actually commercialize it and bring real use cases to it. Ethereum iterated and improved upon Bitcoin in a cool way, and Bitcoin did some amazing stuff itself. And so you started seeing the potential of what could come to fruition, and then ultimately, I think we saw where things can really be disruptive to different platforms, and I'm sure we're going to dive into all that fun stuff. But now, I ended up kind of at co-founding Aptos with my co-founder Avery, and happy to share a little bit more of that Genesis story if that's interesting.
Yeah, well, I'm actually, before we even get into that, I'm curious about ConsenSys because a lot was happening at ConsenSys in 2017. I mean, it was kind of an incubator for all of crypto, and a lot of ideas failed. Certainly, MetaMask was one of the successful ones that kind of emerged, out of ConsenSys and continues to be, by far the largest revenue driver for that business. But you presumably, built an unbelievable network in this space. I mean, it's kind of, a lot of what happened in crypto. A lot of the founders of different projects, VCs at different firms, mutuals that we were just even discussing, were also at ConsenSys. So curious as to what it was like actually working at ConsenSys in 2017.
As I respond to that question, I'm looking at the Fox plugin on my browser. It was amazing. I mean, well, the energy that that existed around that bubble, that community that existed in Brooklyn was very powerful to see. You had folks that were creators that were interested in things like NFTs, that before even NFTs were a term. You had culture forming around what crypto ended up becoming a very large catalyst, because it attracted so many people that were passionate about that story around platforms just taking a big piece of that value. And then you had a group of technologists at ConsenSys that were actually making things happen. MetaMask was a great product and ended up going from a few hundred users to millions of users. And ConsenSys, a lot of credit goes to them for being brave enough to go out there and make that happen. But there were other tools that I think ConsenSys was building that were very interesting. I got to see things like Truffle and Infura, which ended up being cornerstone building blocks for anyone that wanted to deploy an application on Ethereum. And so that was a lot of work, and you got to give a lot of credit to the team at ConsenSys and what Joe Lubin and his vision of actually bringing Ethereum to developers to actually build, instead of just having to go out and do it independently. And so ConsenSys did a great job of that, and being at the ground level in those early days. I mean, it was a lot of fun. I remember watching an NFT standard. Before the NFT standard became the NFT standard, and using it for things like crypto kitties in very early days. And now you got folks like Roham and Dieter and Dapper Labs and Flow that all kind of, came out of crypto kitties and amazing stuff happening there. So it was just incredible to see the amount of energy and innovation in a small warehouse in Brooklyn that has now permeated throughout the world, and certainly important lessons that we're applying as we're thinking about the Aptos community growth.
And so let's contribute. Let's transition into Aptos. So can you kind of tell us about the birth? And you've been in the space for a while. There are a lot of layer ones. Why do we need another one?
Yeah, it's so I guess when we were when I was looking at deploying applications on Ethereum, it became very clear that there were interesting products that you can now build. And actually, CryptoKitty is a perfect example. I mean, when I was out there breeding cats and trying to sell them to you or to my buddy Thomas or whoever, the challenge was everyone's excited about this thing, but gas fees are just going up, and so execution of those of sharing value with each other became actually more expensive and more inefficient than large platforms that existed today. And so that was a gap that really needed to be solved, whether it's low gas fees or thinking about things like throughput and low latency. And so some of the use cases that had so much promise just weren't coming to fruition. In 2019, I read a white paper written by a few folks at Meta or Facebook at the time that were creating this project called Libra. And their approach to scaling was unconventional relative to everyone out there in the market. And this is at a time where there are a bunch of protocols trying to move the ball forward, and some of them have done that, and other scaling solutions like layer 2s as well. But Facebook was taking a very different approach. The Libra technology at the time was taking a very different approach. It was rethinking, how do you bring billions of people into the space and give them assurances that their assets can be safe and secure and be and not break composability. So I joined Meta and got to meet an amazing group of scientists and engineers that were building the technology that could again support that level of scale for someone like Meta, 3 billion plus users. Of course, there were challenges with bringing that project to fruition, but Avery and I were incredibly passionate, along with a lot of the team that's here today, about how this technology could have a lot of impact. And we thought it was too powerful of a technology to sit within any one entity. And so, fast forward, we're very fortunate to be out here to bring it to life. It's been pretty much 3 months today, since, as we're speaking, for the product to be out of market. And but for us, it was all about why do we need another L1? To your second question, what we did not see taking place is products being able to hit scale despite seeing product market fit signals. And I think an application that I think about is someone like STEPN. they had extreme virality take place in kind of a move to earn model, which I thought was fascinating. But what they also did was powerful is bring a social component to things. The challenge was the more people started using it, things started to break down. That doesn't happen when you deploy an application on AWS or Google, right, on cloud infrastructure. So why should that happen on a blockchain? And so those conversations with projects, the pain points that they were facing, really validated the need for another blockchain, one that does not have downtime that people have experienced in the previous generation. One that where if you and I are really excited about using applications, now you and I got to wait until maybe midnight to transact, so costs are lower. If you and I or someone is sending money across the world or a stable coin across the world, well, I mean, latency shouldn't be an issue or something that you need to think about. And so, all these conversations with applications, with builders validated there is an incredible amount of demand in this space, in this world for not just block space, but block space that has assurances and guarantees for applications to run smoothly. So a lot of our builders that are building on top of Aptos, over 200 projects that are building today are very excited about that. They can build applications on us that they cannot build anywhere else. And so, they're going to have a competitive advantage when they're going to market.
Of that and why it's different. So, like, what is an application that you can build that you wouldn't be able to build, for example, on, because there are a lot of blockchains that are focused on increasing block space, increasing TPS and other things. So, I think this idea of assurances is kind of interesting, but like, what are the types of things that you could build on Aptos that you couldn't build on a different chain?
Yeah, it's a great question. So in terms of what can you do, what you can't do today, right? So if there's a game, for example, that has 10 million users, there are and they're all excited about owning an asset within a game. Owning is just one component. Yeah, we can buy and we can all buy at separate times. But now, what if you and I are in a Fortnite environment? I need you to pass me that skin or that weapon to be able to complete a task within a game, and we need to get it done in the next second, right? I mean, you can kind of forget about it based on latency across the board today, especially latency when you have 10 million users playing the game at the same time. And so a company like NPixel, which was solving exactly this problem, they got 10 million users in a game called Grand Saga, one of the most widely played games in Asia. They wanted to use Web3. They saw the same thing that we saw, but they did not feel comfortable with the technology out in market. And so they've done an unbelievable amount of digging from a technical perspective to see what can support this vision of like you and I playing across the world, sub-second latency to be able to transact and share those assets and in kind of an immersive experience. Whether you want to call that a metaverse, that's on you. But to be able to share value and assets seamlessly is absolutely critical for gaming. And so Grand Saga is going to be going live later this year. And we're incredibly proud of what Metapixel and that team has been able to do in such a short amount of time, and bring that use case to life. The differentiating factor for them is not only low latency and high throughput, but it's also things like Move. So Move as a smart contract programming language was built from the ground up with safety and security is in mind, to be able to give large enterprises that assurance. So, when you write a smart contract and, get it out into the environment, it doesn't just haphazardly get deployed. We have something called a Move Prover. Wolfgang, who's on our team, can go into the details if anyone is interested. He's putting amazing content out there. But essentially, imagine writing a smart contract, but before you deploy it into production, it goes through a series of checks and assurances to basically give you confidence as a developer that, okay, I feel comfortable putting the smart contract out. And if there's something that's a yellow flag, it gets kicked back to you, and you can kind of clean things up and polish it and give, again, that smart contract language a lot more safety in the wild. And so, this is something that we saw as a major pain point in existing ecosystem. So having the Move virtual machine, having things like the Move Prover end up adding to those assurances that someone like a gaming company is looking for. And it can probably also support a lot of the folks that listen to your audience, right? So, if you have someone interested in building the next generation of financial applications, they want to be able to provide their users, their stakeholders, their constituents the same assurances, and things like Move are again a step change in differentiation.
And so, one of the things that you spoke about, and you spoke about it in light of Meta, but I think also with what you're doing now is being able to support hundreds of millions, if not billions, of users, right? Currently, we don't have that. If you look on chain, if you look at any application, there's, Uniswap, which is one of the most widely used applications. On a good day, I mean, I have the number. It's 100,000 users or less, right? It's a very small amount, and that's probably the most widespread or widely used application on chain. Obviously, there's some NFT projects. GameFi, I think at this point is a little bit more theoretical, but it sounds like you're one of the. I mean, I think GameFi hasn't really been tested yet, just because it takes a long time to get AAA games built or integrated with Web3, right? It doesn't necessarily happen overnight, and so I'm curious as to what do you think are going to be those like first real world, widely accepted use cases of crypto? I think GameFi is a very interesting example of that. And then what are you specifically focused on building and attracting, to your chain, right? Are you focused on GameFi specifically, or are you focused on DeFi? I mean, do you think it makes sense to specialize in a particular sector? So there's a lot to unpack there, and I'll kind of leave you to it.
Yeah, I'm gonna hold you accountable to help me break that question down as I kind of respond. So
I think there's three questions, right? It's like real world, widespread use cases. What are you focused on, and like what is your core focus, right? Are you focused on multiple different things?
Yeah, so if we think about the previous generation of protocols, there were a lot of constraints and design decisions that folks had to make. Right? Do I want to think about centralization? Do I want to think about performance? Do I want to think about efficiency and cost and settlement, or do I want to think about security potentially? And so, we did not believe that those were trade-offs that actually needed to take place. Again, we had 4 years to actually think about things very, very carefully. There's over 100 people on our team now, close to 15 PhDs, I believe, that all specialize in different in different fields, everything from cryptography, high decentralized systems, high performance computing, and so on and so forth. And so, to be able to put these minds together in a room, we are able to actually solve these problems concurrently. And so we don't have to operate with these constraints of, if we only support centralized game use cases, we therefore cannot be decentralized enough for, the next generation of financial use cases. So, our perspective has been, we're going to build the best protocol out there that not only rivals, the protocols of the previous generation, but we want to rival existing economic value rails. And if you look at Visa, MasterCard, DTCC, and other money movement or economic value movement rails, even those are completely antiquated and also don't have composability with each other, right? So we took that grand of a perspective. So we don't think that you can't do gaming and DeFi on the same chain. And that's our approach. So the answer to your question is, we're not focused on any one specific case because that I think that's maybe the wrong perspective, and that's a constraint that we don't want to operate with. I think that's what the previous generation had to do. But that doesn't mean we ignore niche use cases or niche industries. Gaming, again, being one of them, I talked about, and Pixel and Metapixel and what they're up to. We have great relationships with partners like MoonPay on payments and how we're moving the ball forward there with them. We have amazing investors like Coinbase and PayPal, and certainly imagining what those folks could potentially do on our protocol will change the way we think about finance as a whole. It's happening right now with things like with protocols that you mentioned. In fact, some of the constraint around the protocol's utility might be because of poor user experience, because protocols aren't scaling with them. I would love to see the decentralized protocols and their performance on Aptos. We're going to do some very interesting stuff, and we're going to do it completely in the open, by the way. And actually, I got to invite you to this, so remind me. But we're going to do some testing live on-chain testing on live to demonstrate what our network can do. So stay tuned for that. But we want to show the world that not only are we an L1 that rivals the previous generation, but we're going to rival money movement rails. So and to do that, you can't focus on any one specific use case and industry. And so we're really excited about what we can showcase there.
So building great tech and a great blockchain is one thing. Attracting the best talent to build on it is another thing. And so how do you think about attracting, the best developers within crypto or outside of crypto to actually build on Aptos? How do you want to track them? Are there certain, you mentioned Move, which is your own smart contract language, right? So I'm not a developer, so I don't know how similar or dissimilar it is to another programming language. But theoretically, if it's different, you're going to have to there's some education involved, right? And so how do you attract not just developers, but projects to want to build? How do you incentivize them, right? Do you guys have an ecosystem fund? How do you think about that? So kind of, leave you down as well.
Yeah, I think, our community is very diverse, and developers are a very big part of it. And we think about all the pain points that they've had to face. I had to face personally building on top of Ethereum, and we don't want that to be the world of tomorrow. In fact, if protocols don't solve for that, then we're not going to get developers excited to build on any blockchain. They're going to just continue to deploy applications how they do today. And so they are certainly at the core focus for us. Attracting them has been interesting. Move, although it's a new language, it's actually very easy to pick up. It's very familiar. If you're familiar with Rust, you'll dive right in. We wanted to actually put that to test. We had a hackathon last year in May where we didn't have good documentation out on Move. It was the first time it was going to go out in the wild on a test net, and we said, you know what, we're just going to invite people over into our office. We like to do things that don't necessarily scale. We had, amazing group of students from Berkeley and Stanford show up. We had individuals from all over the country show up. Folks that taught themselves how to code that were former military folks. We had people show up from London and India come over to our office, and none of them knew how to use Move. It was their first time diving in. And, after 36 hours of just building, no fancy hacker house, it was just, pizza and soda. But our team was in the trenches with them. They were all able to deploy applications. We had 12 amazing projects that came out and presented. And the comments that they said were just amazing around having built on, Rust-based or Solidity-based protocols. They said Move was like chewing cotton candy for them, and that was really just exciting to hear. And for us, we saw some really interesting stuff come out of that, by the way. And again, talk about things that don't scale. We said, you know what, these projects are so amazing. We see the next generation of DeFi protocols and NFTs and platforms coming out. We wanted to support them, so we actually took some of those projects and incubated them. We gave them all grants to get them going. Folks like Martian, projects like Icania, all that are now out there doing amazing things, working with some very really great tier one VCs out in market as well for getting fundraising. But they've made significant strides going through, getting some of our support from the accelerator side, but taking Move, implementing things like parallel transaction processing into their applications and doing things you just can't do on other protocols. And so, attracting developers has been pretty easy because people get really, really excited about what they can do with Move, and they get excited about how easy it is. And then, that plus the fuel that we bring with our ecosystem grants program, our accelerator program. In fact, we're going to be, I'm giving a little trailer here. We're going to be announcing our next cohort of our accelerator program soon. So, we're doing things to make sure that developers get the support that they need, whether it's through grant, an ecosystem grant from the foundation, all the way down to going through an accelerator program to getting their products out in market.
So, we focused on building the best technology, attracting developers to build on that technology. But in order for the project to be successful, there needs to be users, right? And I think one of the biggest challenges that has existed to this point is crypto just has bad user experience. It just is like, I have to onboard onto a centralized exchange, then I'm going to send money off of my centralized exchange to my DeFi wallet. Then I'm going to plug that DeFi wallet into an exchange or into any other application, right? Why can't I just go in and feel like I'm on any other application and very easily interact and engage with anything. And so how do you think about that in building a user experience? And kind of a follow-up question on that is, given that you guys are a newer project and theoretically have less users, in part because you've been around for less time than your Polygons and your Ethereums of the world, right? How do you convince somebody to build on you if they push back and they say, but there's 500 million wallets on Ethereum or whatever the number is?
Mm-hmm. Yeah, it's a great question, and a couple of things to unpack there. I mean, yeah, we've only been live for 3 months, but already we're seeing just exponential growth relative to other protocols that had come out. Blockto, which is a wallet on our protocol, has 1.6 million unique users already today. And that's cool. You have things like Pontum that have 230,000 installs within months. And so projects that end up building on Aptos are getting amazing traction. But the reason that they're getting amazing traction is because it's so easy, not only for them to build and get going, but that ease of building allows them and allows those developers to really focus on that user experience. And so, for the builders on our protocol, whether you're kind of a Web3 project that's getting started or a very large game that wants to bring Web3 or digital assets to your gamers, you can do it in a very seamless way. I think the other point that you kind of allude to is Web3 is unique. It brings a very diverse set of users to the world. I mean, I have a view where I certainly like keeping money under my couch. I also like keeping money in a bank. Both of those serve very different purposes, right? And I think with crypto, it's the same, right? Like you can have a self-custody solution, or you can have a solution where you might want to rely on another party for custody for different set of uses. How much you keep in each one of those scenarios, that's on you. That's based on your preferences. And so we want to provide a similar experience to users. So, if you want to enter through a centralized way, we want to make that happen. If you want to go through, if you're a Web3 Pro user, you can enter the space in the way that you've been used to entering the space. And so, let's talk about that first category that I talked about, right? So like, if you haven't used crypto before and are excited about getting an NFT, you can use, one of our wallets. But the cool thing is, Petra, which is one of the wallets on our protocol, has MoonPay integration. And so what that allows people to do is come and instead of having to go buy a stable coin or buy crypto and then use it to buy an NFT, at that point, you probably have lost, there's a drop off, right, in terms of adoption, and you've lost interest. MoonPay changes that. You can go out and very quickly put your credit card information and buy an NFT, no different that you would, buy something on Amazon or check out on a commerce site. And so we think that experience is the experience that brings millions of people to crypto. In fact, you don't want to have to think about dialing up on the internet like you had to in the past, right? The technology and the gateways to the digital world should seamlessly go into the background, and blockchain and Web3 should become hidden behind the application and simply. The simple integration or its user experience for anyone using an application should just be the product that they're passionate about. So that's already happening, right? And it's going to continue to happen. So imagine, just going back to our gaming example, if you and I wanted to buy an asset within a game, how crappy would it be right now if you had to go into a Chrome browser or a different wallet, buy assets, and then port them over to a game? That's not going to be an ideal outcome. And by that time, it's game over, pun intended, I guess. I was trying not to go there, but this is that's just not going to be great. So we think all the gamers in the future, they might be using a blockchain without knowing it. I mean, people, when you're playing a game, do you think that you're using TCP/IP? No, you don't. You just hope that it works well. And so we want to recreate that same experience.
So I think that's an interesting point, right? The idea of in-app wallets, right? Where basically you're interacting with Fortnite. You have a Fortnite wallet powered by Aptos, theoretically, or by some other blockchain. But what we've seen at least, on our end, looking through data, is that a lot of times these chains have low user retention when somebody kind of comes in through an in-app wallet, right? Where they're not necessarily using other things on the chain. So how do you get somebody who's interfaced with Aptos for the first time through some sort of in-application wallet to actually engage with other applications on the chain? And how do you build that kind of awareness of Aptos, right? Like ideally, the person doesn't need to know, right? The person doesn't need to know what they're interacting with, but for the health and success of the ecosystem, right, and for it to grow from its infancy, right? Theoretically, I think if like, for example, and I'm not trying to throw out a competitor, but Reddit with Polygon NFTs, right? The challenge I think Polygon's going to have is how do they figure out how to get people that interface with the Reddit wallet to actually go and engage in other things on Polygon? And is that really an active user on Polygon, or is that somebody who's just using a Reddit NFT?
Man, this is such an awesome point to bring up, and there's so many things here. I mean, composability really matters here, right? Shout out to Sandeep and the Polygon team. They've done an amazing job raising awareness for Web3 in the space. We're benefiting from some of the work that they put down, and we want to push a lot of that stuff forward, right? And so right now, if 1 million people try to use do that same flow that you described, that could cause problems. And so we want to be able to solve that from an infrastructure perspective, right? If 1 million people go on let's say Nike and want to buy a sneaker, do they think about the cloud infrastructure that's powering Nike? I hope not, because if they do, then there's a bigger problem at hand. And so we want to take the same approach. And as cool as it would sound one day for people to shout Aptos from the rooftops, I think the most honor and appreciation that we can get is people don't even mention Aptos at all, because the user experience is so seamless that the applications and the developers and the builders are getting all the credit. And I think that's the world that we want to be moving towards. And so, and with that being said, no doubt about it, we're going to continue to educate the community. We're going to continue to work with them in the trenches. And that's, I think, the difference between us and a cloud provider. We have an amazing component of culture, and we're proud about that. But at the same time, we don't want a user to have to worry about, what blockchain they're using. We just want them to have the best experience possible. And a lot of our builders operate with that perspective. I love our community. They do an amazing job about talking about Aptos and why they chose to build here, and they're not going anywhere. How much they love Move, and Move is so amazing on Aptos. And we're going to continue to support that. But, quite honestly, it would make me and our team here very proud that no one even knows that it's Aptos in the background. It's just seamlessly working. That would be an amazing day.
So I think that's an interesting point. So what do you think of when you think of KPIs, where you're like, this is what I want us to achieve in 2023, right? Is it number of applications deployed? Is it number of developers working? Is it number of unique wallets that exist or unique addresses on the chain? Like, how do you define, if we were going to come revisit this in January of next year, what are kind of the, obviously there's internal KPIs than what you're willing to talk about externally, but at least external KPIs and types of things that you'd want to look for.
Yeah, I think from just an ecosystem perspective, I think Web3 is going through it's kind of cocoon moment, right? And we definitely have to take a moment and acknowledge everything that's going on around us, and the challenges that the space is facing. And I think that the good thing though is it makes us a little bit more principled in our approach going forward. And so what is it that we want to see? I mean, measuring users has been a problem for this space. Measuring volume has been a problem for this space compared to compared to broader tech, right? Folks throw out numbers of transactions on chain based on wallets. Well, what if a user has multiple wallets? How many of those wallets are bots? Very difficult questions to actually solve. And I don't think anyone has figured out a solution.
I think sometimes people overthink those questions though. Because for example, it's very easy to detect a bot. Like if you have a wallet that's interacting 24 hours a day, it's a bot, right? If it's interacting every single hour. So I think the space also tries to, granted we're a data company and I think we've answered a lot of those questions, but I think this space often tries to overthink it, right? And there's some kind of more easy and obvious ways. You can cluster wallet addresses if it's 5 wallets that are sending funds back and forth theoretically to the same person. But I think in the world in which you envision, where a user doesn't even know they're using Aptos, it becomes almost impossible to track.
Yeah,
because
I mean, all sorts.
NBA, Top Shot, or whatever, all these different games, they have a different wallet address, right? And then that becomes, I think, significantly more difficult.
Totally agree, and that's kind of the beauty of everything being public and on chain. So, and attribution and testing is going to be really important to think about in 2023 as everyone starts to go back to that principled approach. I mean, what we would love to see in the space is long-term sustained growth, right? And that means, again, going back to principles of like what more activity moving on chain, more activity being composable. And we don't know what those metrics are as a space yet collectively. And it's kind of hard to get everyone together, but I think we definitely want to start to see things in the millions, right? Hundreds of thousands of users for an application of, of Web3 and blockchains being out for close to a decade. I think that we can all agree that's a little disappointing for us, right? It doesn't take, it did not take that long for Web2 to reach that level of adoption. And so, yes, it is early, but we also need to continue to focus on how we build products that can get to, mass adoption. And again, a lot of that is going to come down to the user experience. So, what would be amazing to see by the end of this year is, how we have collectively millions of daily active users or daily active wallets or, TVL or number of transactions increasing, and of course, abstracting away the noise from those metrics. But we also want to see much better principled approach at the infrastructure level. It's unacceptable for imagine trying to buy a coffee and the Visa network is down, right? Imagine 30 seconds of waiting for a financial transaction to go through. That's in fact worse than the Web2 world that we live in today. And so, if Web3 wants to challenge, from a decentralization, it needs to still perform. And so what Aptos is going to do is showcase those numbers and again, very publicly, right? Thousands of transactions per second supported. We've done some very interesting testing that Avery is going to be sharing more publicly. Latency, where no one can kind of compete with us, is going to be really valuable to see. And all of that while maintaining, a Nakamoto coefficient that we're very proud of from a decentralization perspective. So it's hard to do these things together, solve for all those components together, but we want to showcase that in 2023, and we want to be able to do it in a much larger way. And so I think those will be proud things that we can look back in next year and point to as marks of success.
And so what are those first few things that are going to attract millions of users? Like, what do you think is the first real, because you mentioned STEPN, for example, which yes, did have millions of users, but 99.99% of them are churned. What is the first application that you think really attracts millions of users to crypto in a sustainable way, on Aptos or just in general to the space?
I think we've seen some of that already with NFTs, right? And I think users, I guess, can be used broadly. Creators have been building in the days of platforms for quite some time, and they get rewarded as a result. Creators on music platforms like Spotify have been creating it; they get rewarded. The challenge is, they don't get rewarded fairly. They don't get compensated fairly. All these platforms end up taking a big cut, and so I think the applications of tomorrow are going. And by the way, the demand is waning for a lot of these platforms already, especially as the next generation comes online. And not online, they're just starting to, actually dig in and going out to these consumer behaviors. Think about the high school student that's now going out and is excited about supporting their fans. Think about the college kid, and think about someone now matriculating and going out into the world, and they have money that they want to spend, and they want to do it in a way that empowers the creators that they value, versus empowering a platform that maybe will empower a creator, maybe not. And so those are the applications that we're going to see gain massive adoption. And we've seen hints of that. Platforms like Audius are challenging the status quo. Platforms like Lens Protocol are challenging the status quo. And so have they reached scale? Not yet, but we want to see those projects achieve scale. And what we don't want those projects to do.
Like what
Yeah.
what gets it? Because we've been talking about a lot of these ideas for so long, which is frustrating, right? I've been in this space, as you have 5-6 years, right? Where a lot of these ideas we've been talking about them and talking about them and talking about them, but practically speaking, we haven't hit it yet. So when do we get there? How do we get there? Right? I think we're seemingly so close in so many different areas.
Have you tried Lens yet?
I have not. I can't. I've tried Audius. I have used Audius before.
Oh, yeah.
I couldn't necessarily find anybody I wanted to listen to, but I have tried Audius. I have not yet interacted with Lens.
Yeah, and so this is a very complex problem to solve, right? I mean, you need to get creators educated and get them onto Audius. Meanwhile, you need to go out and also educate consumers that are using platforms like Spotify, where 99% of royalties go to top 2% of the creators, and that's not fair to all the musicians on the Spotify platform. Platforms like Tidal have tried to challenge that model, and so there's a lot of education that needs to take place, but we need to. It's a multi. It's a marketplace problem, right? But I do think we're seeing a lot of movement. Audience has a lot of work ahead of it. Now, what we don't want to happen, though, is imagine 1 million people are trying to listen to music at the same time when all the creators are there, but then the audience goes down, or accounts can't be created, or royalties can't be distributed. Now, that platform could potentially start falling apart because of the frail infrastructure that it's built on top of. And that has been a major problem for scaling projects, not only like Lens that change business models, but also platforms like Audius that are changing business models. Similarly with things like Lens. I mean, if you go out there and try to create an account there, there's opportunity for improvement, right? So you're going to get a user that's going to fall off the adoption curve when it comes to trying getting a Lens account set up. And Lens is working really hard to move that ball forward. So, but what we want to do as Aptos is provide an amazing experience so you can get a normal, the layman or the average individual onboarded, again, without knowing that they're even using crypto, a wallet, or any of these Web3 terms that we've had to popularize for the sake of adoption for the Web3 Pro user, but now it's that next generation. And so this is, again, where things like MoonPay come into place. Things like Hypermint are solving these problems. Things like, folks like PayPal are even solving these problems with their integrations. And so that tipping point, you're absolutely right. We're really, really close. All the big pieces are really starting to come together in a major way because these models are actually getting disrupted. All that's happening. And then you have the grumblings of everything that's going on in the world outside of crypto, right? Like, look at the social media platforms. They're facing their own share of challenges, right? I mean, I don't have to repeat what's out there, but try going out there and posting a tweet and some of the challenges that you might go through on using a platform like Twitter today. So the users are frustrated. People are walking away from these large platforms that they have used, and that they are starting to become antiquated. And people are looking for what that next venue is going to look like. Take Mastodon. I think Mastodon had 10x growth since Elon Musk acquired Twitter. That's clear signal that people are tired and want to try something new. And this is an amazing opportunity. And I would kind of really encourage the builders out there. It doesn't matter if you're a Web3 builder or a Web2 builder. If you're a builder building applications and you can figure out what a good use case is in social right now, you have the world in front of you. All eyes are on you, and it's an amazing opportunity. But in order to achieve, things like a decentralized and completely open and permissionless social graph, you can only do that at scale on things like Aptos.
And so, we've talked a lot about TPS and block space, right? And my head immediately goes to, holy shit, there's going to be so much data there. How do you handle that? Right? Like, my immediate thought is, like, 5 years from now, anybody trying to interact or access data is going to be parsing through, with archive nodes, hundreds of, or not thousands of terabytes of data, right? Like, how do you actually even get the balance of a user, like, in the state? Like how do you know what a user's active balance is? You actually have to go through hundreds of terabytes of data and their transaction log and their transaction history to kind of figure it out. So how does it actually get managed? I don't know if I asked the question the right way. I'm sure you know how to answer it better than I can ask it. But how do you actually manage all of that data? How does that, I guess, interact with people trying to build on Aptos, or people trying to pull data from the chain? Because theoretically, I mean, you're talking about, I would say, what is unprecedented, or, there are a couple of chains that we've dealt with, building on-chain data support for before, where it's like, wow, we have to deal with 40 terabytes of data to fully backfill the history of this chain.
Yeah, I mean, first of all, I think there's some really cool stuff going on in AI, and just imagine scraping the web to get some insights and some good outcomes for a product, right? ChatGPT, unbelievable in terms of the performance that product has been able to offer.
Also,
we want to think about that level. Absolutely right. Absolutely right. And so, there's always a trade-off, right? What is the willingness to pay for a user, for data, for whatever it may be? That user could be an app developer, it could be an advertiser, it can be you and I just using an application as a user. And so, I think we're always going to see, some kind of economic value be attributed to what needs to be on-chain versus what needs to be off-chain. And I think that same world is going to continue to evolve, as Web3 continues to grow. But take a look at things like BigQuery, right? Like Google has done an amazing job of indexing the world's information and making it available very efficiently. And we're very fortunate to have a partnership with Google where BigQuery is going to be live on Aptos. And so, they're the ones that are actually going to be able to index or make information gathering more efficient. They're going to push these boundaries better than anyone out there in the market. And there are going to be new people that come to the world and have interesting solutions out there themselves. And we've seen a few in this previous generation. You have folks like Filecoin that tried to solve these problems in an interesting way. Also ended up becoming very expensive solutions, right? So, it's kind of hard to say what the steady state outcome will be, but I do think there's going to be some normalized distribution curve, dare I say, on data pricing. And what that data is, and not all data is built the same. I mean, our social graph may have different value on chain, leading to on chain versus off chain. Financial transaction information might have a very different set of a different value, right? Like if there's a large block trade that's taking place in a dark pool, two very large financial institutions trading with each other, they probably want some anonymity. They also want some assurances. And so they might be willing to pay a lot more for block space than, maybe I might be willing to pay for my social graph on chain. And they have the propensity to pay that. So I think the laws of pricing will probably still apply. Now, the other thing that you bring up that's interesting is, where we go to scale. And so, some of the things that we've heard are just astronomical, right? Like, folks have asked us, how do you get to not 1,000 transactions per second, which we can easily do, and we can kind of talk about that without, on a really good distributed cluster. But how do you bring 500,000 transactions on chain per second? Yeah, think about that. A million.
What are the credit network actually processing right now? I mean, obviously, it's actually the wrong analogy because that's just for financial transactions, whereas there are millions of other types of transactions happening every second. So,
I mean, I think you can go out and look this up. It's an excellent point, and this is why I love your show. Right, diving right into the numbers. There's around 1,700 transactions per second that take place on the Visa network. On average, right? Of course, there's kind of peak times, and that's 1,700 transactions per second globally. That's Visa's 60 to 70% of all global credit card transaction processing. Now add MasterCard to that, add PayPal to that. But you probably get to like 5,000, 10,000 transactions per second just to support payments. Now, tweets. Let's talk about tweets. How many tweets are there per second on average? Not when Elon is talking about FIFA.
We have Twitter firehose access, so we process 1 billion a day. There's about 1 billion tweets a day on Twitter.
Yeah, and so I think on average, the numbers that were reported in the past were 2,200 transactions per tweets per second on average, right? And so if you start to add up 2,000 transactions, 2,000 tweets, 10,000 payment transactions, imagine all those things either happen concurrently or jointly, right? because social interactions and payment transactions are starting to blend the same. Think about Venmo, right? I might make a pizza transaction and I might post it on Venmo at the same time. Both of those are two transactions now that need to happen on chain. And so if that is the world that we ultimately want to support, you need to be able to support millions of transactions eventually, especially as more and more of this activity shifts to being digitally native. And so, how do you get to supporting close to 500,000 transactions per second? I mean, those are the numbers that we're starting to think about, and those are the glacial problems that we're trying to solve.
But does all of that need to be on chain, and why does it need to be on chain?
I mean, one of the visions of blockchain and Web3 is composability, right? The more you move things off chain, the more you start to break composability. The more you move to layered scaling solutions, you've lost composability. And at the same time, you've introduced latency. You've also introduced security risks. And while I appreciate kind of whatever layers we need to get to, I mean, at some point, you might be asking yourself as a large enterprise, should I just use a cloud service at this point? Because it's the more you go up the stack, the more centralized you're likely to become. And so as much of this we can push down to being on chain, as much of this we can aggregate to a layer one and have horizontal scaling. That's when I think we move to a world where we are not breaking composability and can bring that Web3 vision to life.
So, we spoke earlier, you gave a shout out to Sandeep. And so do you believe in a multi-chain future? And I'm curious, do you believe in a future where there are actually is there a world where layer twos need to get built on Aptos? I mean, if you're, does somebody need to, roll up transactions even more than, to be able to post even more than 500,000 transactions a second?
I think that's, I don't have the crystal ball to decide that, but right now we have plenty of space. We want developers to push the boundaries. We're not even breaking a sweat yet on the protocol. So we're actually looking forward to more activity coming onto Aptos. We have some really exciting partners that we'll probably share in the coming weeks or so. In fact, we have our first hackathon taking place February 1st to February 3rd in Seoul, where all these developers are going to be pushing our network to the max. I mean, in terms of scaling solutions, I mean, we're not there yet, but other protocols absolutely have needed it. And while we think of a multi-chain future, I mean, it's a multi-chain world today. We are present in a multi-chain world, and so. The challenge that's existed is those multiple chains have been pieced together through things like bridges, and things like Wormhole and Pith and Layer Zero have done the best that they can and are continuing to push the boundaries forward as well. And some amazing teams out there doing God's work to make that happen. We expect these things to become hardened over time and continue to move forward, and we're rooting for those teams. We're going to, but at the same time, we're going to do the best that we can to bring a lot of that activity on chain and ideally onto Aptos. Now, another thing you can ask is, well, where are the network effects? I mean, after all, we are networks. And so I think there are a lot of things that go into consideration. What is the cost of using these scaling solutions, not just from a monetary perspective, but I mean, developers now have to worry about an L2, an L3 potentially, and an L1. Think about all these roll-ups and zero-knowledge solutions. And that becomes a very complicated tech stack for an engineering team to want to manage. And they're building a lot of technical debt along the way into their product. And that makes it difficult for them to maintain their products, right? And large enterprises and small enterprises don't want to have to deal with that. They want to build the best applications possible without introducing that complexity. And we've seen, again, cloud is a great example to pay attention to. You have someone like GCP, someone like AWS, and someone like Azure do a great job of making that developer experience as seamless as possible. And the more you can do that as a blockchain, I think the more successful you'll be. And that's certainly one of the key things that we're focused on.
And so you're on the Fundamental Value podcast. And granted, most of our guests tend to be hedge fund managers and investors and traders. Typically, though, we are mixing it up a little bit. And we have a few other founders of layer ones and layer twos joining in the future. So excited about that as well. But one question that we naturally ask on the Fundamental Value podcast is about fundamentals. So how do you define fundamentals for digital assets, right? As you kind of look across the board at a wide spectrum of digital assets, layer ones, DeFi assets, metaverse assets, NFTs, what are the fundamentals that people should be looking at when they think about the success and the long-term success of these projects and what they should be excited about? And it could be on a I would say sector basis. Like I would define layer ones broadly as being a different sector than DeFi, or kind of across the board for crypto.
Yeah, I'll kind of take this up, between a few categories. I mean, from an infrastructure perspective, we're seeing a lot of investors in the space become much more sophisticated than they were 5 years ago. Folks have engineers on their team that understand protocols, and I think the ones that will be most successful in understanding, L1s are going to be the ones that have a deep bench on from a technical perspective, and do understand, why things like Aptos are the next generation of blockchains compared to everything in the past. Being able to write a smart contract and move and deploy it as an engineer very quickly shows you the efficiency in a workflow relative to other workflows that you might have had to manage. And so we think the fundamentals to pay attention to are that developer experience. Of course, you can start to break that down as these institutions build out their teams in a much more robust way, and that it's amazing to see that across the board. And I think institutions and financial institutions are only going to get more sophisticated about the space, and we're excited about that. Other fundamentals to pay attention to are at the application layer. Well, actually, I guess before I get to the application layer, the tooling layer. And so, what are the tools that are being built to make the lives easy for developers, but also ultimately lead to a much more seamless user experience? And what does that user experience get to? And I'll get to that next. But what does the tooling look like? How much tooling is there? How easy is that tooling how easy is that tool accessible? How easy is what are the outcomes of that tooling? What are the efficiencies of that tooling? And so, how much does it cost? And so, these are the things that I think institutional folks need to be paying attention to as they're thinking about how people are going to be building beyond the layer one. And then finally, it comes down to the applications. And I think there, folks like A16Z and Multicoin investors of ours, they've kind of proven out how you think about applications in this space and engagement. And I think you brought up some great points around wallets as a measurement, clustering wallets that have certain attribution. That's a very interesting thing to pay attention to. You have products like TRM that help you facilitate that. And so we have on-chain activity as a great measurement, but that on-chain activity is not measured the same way as activity in a typical consumer application that is Web2 that's built in kind of the Web2 world. And so you have to identify what makes sense for you and modify those fundamentals for the applications of tomorrow. And that's when it starts to get a little bit hairy. And you might be certain, just to take it a little bit deeper, you might feel comfortable with a certain amount of risk within those active users or wallets, active wallets, right? Where you might say 10% of this is definitely redundant users or bots or whatever you want to call it, right? I might have multiple wallets because I don't want to get doxxed out there. It's just good hygiene for Web3. And so, it's not like I'm trying to create multiple wallets to try to get engagement up, but it's just a great use case for me. And so we have to be able to understand that attribution and user behavior is different in the Web3 world and Web3 applications than it is in applications in the Web2 world. And those are fundamentals that are still being shaped today.
And so what are the most, exciting emerging areas in crypto that you see now? I think you mentioned Lens with Aave. But curious if I know we've kind of alluded to this a little bit, so maybe we can go kind of quickly. But
yeah, I mean, there are a couple of things that I'm pretty excited about. I think the NFT marketplace has, it was a very exciting moment for just the NFT world and for the Web3 world. But what a lot of people don't realize, it feels like eBay for NFTs, and I mean. How could we be thinking about improving on that NFT marketplace experience is really important. And I'm excited to see there's some cool folks building some interesting stuff that's going to go live on Aptos. But you can only challenge these marketplaces and things like bidding happening within microseconds on protocols like Aptos. Or on Aptos specifically, I should say. There isn't a protocol like ours out there. We're excited to see an iteration of NFTs take place and marketplaces be at the center of that.
A very difficult question on that is, how do places like that build moats? Like, how does a decentralized application actually build a moat on chain?
So it depends. I mean, it's a good question. Is that application, how decentralized is that application? I think is a thing to keep in mind.
As an example, right? Like, I think in this theoretical world in which an application has its own in-app wallet, like I think, I think like NBA Top Shot had originally done when it launched, right? It was kind of clear that like users had engaged with NBA Top Shot, they had their wallet on platform, and they had built some sort of a moat. Maybe their licensing deal with the NBA was a moat, right? But like thinking about stuff that's actually happening on chain, like obviously Uniswap, put provisions around anyone else being able to, basically fork the code of UniV3 for a couple of years. So I guess that would be another kind of, example, but that's a little bit less in the ethos of decentralization than I think many in the space are going for.
I mean, there's kind of two answers to this question. The first is the one that you hinted at, right? Putting provisions in place, and some of those provisions aren't necessarily, driven by projects or protocols. Working with large institutions, they have their own perspective on things, right? So, it's kind of a forced moat, right? But that forcing is not necessarily because people want to say we're only building here. It could be permissioned or it could be permissionless, but the challenge is it's if you're dedicated. If you and I had a startup and we got 3 engineers, do you think we're going to go out and build multi-chain on day one? No, we just can't. Even if we scale and hit 1 million users, okay, now and we got some Series A funding from some great investors. We've grown and we got now 50 engineers. We need to make sure that we are building the best experience possible for the users that we have. And so going, cross chain becomes very difficult to do, and it becomes it's because you want to be disciplined, you want to be focused. And so I think the biggest moat that anyone can build is providing the best user experience and capturing those network effects so that no one ever wants to leave. And that I think is a very difficult thing to do, but it's the most powerful moat. And so communities are thinking about that, and there are a lot of folks on Aptos that say we're not building on any other protocol because it's so damn easy to build here. I'm not going out and building, wasting dev cycles, deploying a product on, a protocol X for a few 100,000 users. I want to scale to millions of users on Aptos because it's in fact the only place that I can get 1 million users. And so we think that the infrastructure itself is a moat, but going out and capturing those network effects is what applications are able to do as a result. And so, you avoid technical debt by doing that. And I'll just kind of push this a little bit, one step farther. Imagine, we did take an approach and said, hey, we want to go build on multiple chains. Well, it doesn't stop by just building and deploying. Now we need to maintain and manage, right? And so that is another problem that we have to face. And, 2 protocols are going to have 2 different roadmaps moving at 2 different speeds. And so that is the last thing that any developer wants to worry about.
To that point, I actually just saw today Maple Finance put out like their Q1 or Q4 transparency report. One of the things that they mentioned is that they got rid of Maple on Solana, which is kind of the first time I've really started to see that we're actually an application actually pulling back and moving from multi-chain to being on a single chain, which was kind of interesting, which I think makes sense.
Yeah, it's a great point. And so I think the second question you were alluding to that I might jump to is, well, what does the future look like if we're in a multi-chain present today? It's because folks are trying to understand where are the best places to build. I think over time there's going to be consolidation, and there's probably going to be, just like there are only 2 to 3 cloud providers, there are probably only going to be 2 to 3 chains out there. It's anyone's sort of crystal ball shake on what that might look like, but it's going to be, again, the protocol that provides the best experience and continues to scale with those products, right? One of the things I didn't get a chance to talk about is how we already have our first upgrade in place. And so while it took Ethereum, years to go from proof of work to proof of stake, and we're not sure what that roadmap looks like for the future, we're pushing our roadmap rigorously. We already have our first upgrade ready for Q1 of this year. That's going to go live. We're looking at Aptos improvement protocol that's going to be taking place very, very seriously as well. And so we're going to continue to improve our infrastructure much faster than any other protocol out there in market, making it much more safe to use, more scalable to use, and much more efficient to use. And so, we are going to see consolidation. And the example that you mentioned around Maple is just one. We're fortunate, and for sake of confidentiality, I can't talk about the projects, but we're seeing a lot of projects start to deprecate support for multiple chains. And that's going to be a monumental shift as those projects go out and continue to announce, we're no longer supporting protocol XYZ because it's just not making the cut for us. Instead, we're focused on the next generation of blockchains like Aptos. And so we're excited to showcase some of those. But cool to see Maple making their stack more efficient and moving towards a more thoughtful developer focused approach for themselves.
Yeah. And I think, also I think people are realizing their treasuries aren't quite as big as they thought they were. And it's time to kind of get lean and get efficient, especially in crypto where, not ousting anybody in particular, but a tremendous number of people thought it would be a great idea to not diversify their treasuries into anything other than digital assets, which is obviously not the most scalable and intelligent thing in the long run. But you mentioned Aptos already has its first, mainnet upgrade or new release rather coming out in a few months. So what about in 5 years where, obviously if you're releasing something in a few months, then theoretically in 5 years from now, there's a lot and it's impossible to predict the future. But when you close your eyes and you think about where the protocol is going to be 5 years from now, what is that kind of dream? What do you envision?
Wow, that's I did not expect to be asked that question. I mean, it's kind of hard to tell. I'll maybe kind of draw back to an analogy here. When telecom companies were laying down, cables across the country, putting satellites in the world, I don't think they knew what was going to be built on top of connectivity. And of course, we've seen amazing things like the fax machine come to life. We've seen, obviously, the internet come to life. We've seen the mobile phone come to life. And maybe just pausing on that last point, did someone like Bell Atlantic envision Steve Jobs inventing the iPhone? I don't think so, at least not on record. But although the Jetsons have done an amazing job of calling the future. But here we are. Now we have,
the Simpsons of,
I'm a very big Matt Groening fan and love the Simpsons. They're up there. Them and the Jetsons together. I think we got 95% confidence interval.
You got to
get
an Aptos mention on the Simpsons, and then in the future, it's limitless. So
I'm waiting for Sir Iger to give me a ring and Disney to make that happen. I would love that. Yeah, I mean, it's hard to predict what people will build on top of a blockchain and on top of this network. But I'm very hopeful that some of these principles that we adhere to today, especially for your audience, I mean, they're going to be challenged, right? And just think about the LLC that was invented fairly recently in the modern world. The S Corp, the C Corp, and those are new entity formations that have changed the way we think about innovation and build products and build companies, get funding and get innovation out into production. And so what things like DAOs do, they push LLCs and S Corps to the next level. What you can do with on-chain assets is very it feels uncomfortable to the money manager at a large financial institution. And so they're now thinking, well, how the hell do I value this thing? Is it a digital asset that has principles that we look at for fundamental bottoms-up equity value valuation principles? Do I go back to my Peter Lynch days here, or do I think about how does someone like a Basquiat or a Warhol think about pricing their art piece? The answer to that question is yes. You got to think about both of those damn things at the same time. And now you've got governance in the mix. And so, we're sitting at a point where there is unprecedented amount of innovation coming together across so many different industries and fields. And it's challenging the way that we've been trained in the classroom. And so that is going to be a very exciting thing to look at in 5 years and see how business models have changed completely. No different than how, someone like Apple and Napster have changed the way music distribution and music business models have changed. Netflix has changed the business models for, film and video distribution. YouTube has changed the way we think about, streaming and content. And so a lot of these things are happening in front of our eyes. And I don't think it may even take 5 years, by the way. I think it's going to happen a lot sooner than that. So maybe in 2 years from now, we can, I'd love to come back on the show and talk about this.
Absolutely. And so my last question, because I know I've taken a lot of your time and I'm incredibly appreciative, is what is your most controversial take right now on crypto?
Most controversial take. I think the most controversial take that we can say is, despite all the applications that we've seen out in market, we have yet to bring the vision and the mission of Web3 and crypto that we all kind of came to this world for. Some applications have come damn close to it across different industries. And so I think the most controversial opinion you can make is we have yet to see that breakthrough product. But that breakthrough product is going to challenge even the way we think about Web3. Where someone was extremely maximalist on, not my keys, not my crypto, you now have to build a product that gives you not my keys, not my crypto flavor, but also a hybrid of, here are, different custodial models. And you have to bring both of those solutions to the table in an application. You can't bring one or the other. Otherwise, you're not getting to 1 million users. And so we're going to see folks start to let loose a little bit as they go back to, okay, well, I need to grow my user base, but that user base is not interested in, self-custody solution within a Chrome extension. We want to see in-app mobile use cases. We want what you talked about, white label solutions within a game to make that seamlessly accessible. And people are building that on top of Aptos, and it may feel a little controversial, but these are the things that we're really excited about that I think are going to have the next breakthrough products out there that bring millions of users.
And so finally, where can listeners find out more about you? Where can they follow you? Where can they find out more about Aptos?
Sure. Aptos Aptos Networks is an independent foundation, and they can follow us on Twitter there. It's Aptos_networks, a network, for that. You can follow me. You can follow Avery. We're always posting stuff that we're building at the lab independently. I'm just Mo Shakes on Twitter, Avery Chink on Twitter. So follow us for some updates there, and those are good places to get started.
Awesome. Well, thanks for coming on. This was great, and hopefully we get a few people excited about Aptos.